Okay, so we are diving into the financial results of Canara Bank for the third quarter of fiscal year 2024-25, right? That's a mouthful.
It is. I mean, it's a lot of data, but let's break it down and see what's actually happening under the hood.
Right. Let's start with the big picture. What are we seeing in terms of overall business?
Well, globally, their business grew by 9.30% year on year, reaching 24 lakh 19,171 crore rupees. That's pretty substantial growth, actually.
That is a big number. Where's that growth coming from, you think?
It looks like both deposits and advances contributed, with global deposits up by 8.44% and global advances jumping 10.45% year on year.
So they're doing well on both sides of the balance sheet. That's good. Let's dig a little deeper. What about retail and agriculture?
The RAM sector, which includes retail, agriculture, and MSME, grew by a solid 12.32%. But retail itself is a standout with a huge 35.46% jump.
Wow, a 35% jump. That's like they're giving away money. I mean, is there an area of retail that is leading the way?
Yeah, the housing loan portfolio is up by 12.26%, and vehicle loans saw a 17.26% increase. So it looks like people are buying homes and cars, which actually makes sense.
Right, that makes sense. People invest in what they know, and housing and vehicles are pretty stable. So, what about the bank's profitability?
Well, their net profit went up by 12.25% year on year, landing at 4,104 crore rupees. And operating profit grew by 15.15% to 7,837 crore rupees. I mean, they're definitely making more money.
So, not only are they growing, but they're also getting more profitable. That's a win-win.
Absolutely. And that's reflected in their fee-based income, which saw a 23.31% increase, reaching 2,185 crore rupees, which really shows that, diversifying their revenue.
Okay, that's interesting. So, they're not solely relying on interest income. So, what about their asset quality? How are they managing their risks?
That's a really important question. Their gross NPA ratio improved significantly, dropping to 3.34%, a decrease of 105 basis points year on year.
That's good news. A drop of 105 basis points in bad loans is significant. What about the net NPA?
Well, their net NPA ratio also improved, dropping to 0.89%, a decrease of 43 basis points year on year, which really shows better loan recovery and management. I mean,
Right, that's a positive sign that they're getting a better handle on their non-performing assets.
Exactly. And this is further supported by the improved provision coverage ratio, or PCR, which reached 91.26%. That's up 225 basis points.
Wow, a 225 basis point increase in PCR, that's some serious improvement there. It shows a lot of caution as well.
It does. And it also helps when credit cost is down at 0.89% and their slippage ratio is down to 0.96%. The bank's overall financial health is definitely looking good.
Right, so their key ratios are all pointing in a positive direction. What about their capital adequacy? How are they looking there?
Their CRA, or capital to risk weighted assets ratio, stands at 16.44% with a CET1 ratio of 11.97%. This is well above regulatory requirements,
That's very reassuring. They've got a solid cushion to absorb potential losses, and it means they're financially stable.
Absolutely. It shows that they're not just growing, they're growing responsibly. And speaking of responsibility, they're exceeding priority sector lending norms.
Oh, interesting. What are they achieving in the priority sector?
Well, they've exceeded targets in areas like agriculture, small and marginal farmers, weaker sections, and micro enterprises. I mean, that's not just about profit, but also about social impact.
Right, that's great to see. They are looking at the bigger picture and making sure credit is going to the areas that need it the most. So, let's talk about their network and the digital footprint.
Sure, they've got a pretty extensive network with 9,816 branches and 9,715 ATMs. They've also got 4 international branches, which is quite impressive.
Right, they have a strong physical presence. And what about their digital side?
Their digital adoption is also pretty strong, with over 1,700 crore e-transactions, 3.25 crore UPI registrations, and a whole lot of other digital initiatives. They're keeping up with the digital times for sure.
So they've got both the physical and digital bases covered. Now, let's touch on something that's important for all the investors. What about their subsidiaries?
Well, their subsidiaries such as Canara Robeco Asset Management and Canara HSBC Life Insurance are also contributing to the overall profit picture, and they have a few associate banks as well.
Okay, so their overall ecosystem is healthy with contributions from their subsidiaries and associates as well. I guess to wrap things up, what are the key takeaways from all of this?
Well, the bank is showing robust growth across all the key areas, with strong profitability, improving asset quality, a solid capital base, and a growing digital presence. And it seems like their strategies are paying off.
Absolutely, they seem to be firing on all cylinders, and their focus on both growth and financial health is very impressive. So, before we forget, a reminder to our listeners, if you're enjoying our deep dives, do like, share, and subscribe to our channel. It helps us reach more people.
Yes, please do. So, it is also important to note that disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Absolutely, that's something all investors should do. So, looking ahead, what's your take on their prospects? I mean, what are they looking at for the rest of the year?
Well, they've provided some guidance for March 2025, and it looks like they're aiming for continued growth and profitability. Their actuals for December 2024 are also tracking pretty well against those targets.
Right, it seems they have a clear path forward. I mean, do they need to watch out for something?
It's always good to watch out for market fluctuations and changes in regulations. But for now, Canara Bank is definitely in a strong position to handle the year ahead.
Well, that's great to hear, and they seem to be navigating the complexities of the market quite well. So, any final thoughts?
I'd say that these results highlight a well managed and financially stable bank with a good strategic direction, and all that is reflected in the positive trends across the board.
Indeed, it's been a very insightful analysis. So, that was a deep dive into Canara Bank's Q3 results. We hope that helps understand their financials in detail. What are your thoughts, listeners?
Absolutely. And, we'll be back with more financial deep dives soon. What should we analyze next, I wonder?